Hello, everyone. Welcome to the GCP podcast Under the Gulmohar Tree. Just as the Gulmohar Tree symbolizes growth and resilience, Under the Gulmohar Tree brings operators, investors, and M&A professionals together to share insights on scaling mid-market businesses. Through candid conversations, we explore leadership, innovation, and value creation, uncovering lessons and strategies to help you grow and thrive. Hi, Vineet. Welcome to the GCP podcast Under the Gulmohar Tree. You and I go way back. For our audience, can you please provide a quick introduction?
Yeah, good to meet you, Sumit. Obviously, we've known each other for a long time. My introduction is I'm a career banker. Currently I'm the global head of technology and business services M&A at Kroll. Prior to this, I've started my career. Majority of my career was in the bigger bulge bracket firms. I spent first 12, 13 years at and then the bigger firms, including Deutsche Bank, UBS, and Citi. And then I joined a boutique bank, and I was a partner there for 10 years before joining Kroll to head their tech and business services M&A.
Awesome. Thank you, Vineet. So, you worked across the sectors, worked on across many different banks and advisory roles. Congratulations. Can you just elaborate a little bit on your journey and what initially drew you to investment banking in the first place?
Naturally, I think I've been fortunate enough to experience investment banking at a global scale. I've worked in different geographies, and I think my interest in banking or finance for that matter started at relatively early from my college days. Yeah, I interned with Morgan Stanley in New York. That kind of prompted my interest into finance, and then for my first job I started off as an analyst at Rothschild, which is an M&A. It's a well-known M&A boutique shop. So I was a Rothschild analyst, and that kind of developed my interest, and then my journey has been got promoted within the organization, and here we are 20 years hence. I'm still doing investment banking, and as I said, I've worked in different geographies from Europe, India, US, and Middle East. Yeah, so I've had the pleasure to experiencing different places and doing similar investment banking work. Yeah.
Got it. Thank you. So, as we briefly discussed, Vineet, you've worked across many companies in various industries. What are some of the key lessons you've learned from advising clients, let's say, particularly in the software and tech-enabled services sectors?
Yeah, I think the key ingredients what I find to be helpful in any deal making scenario is firstly it is integrity. Just be very clear with your clients what the expectations are, what the market are. So if you have a level playing field from an expectation standpoint, and then you go out in the market and hopefully achieve better results, there's no misalignment of interest to begin with. Second thing, from a software perspective, I think the market goes in cycles from the deal making capabilities as well as from valuation capabilities. So just advising the clients accordingly in terms of what is important to the buyers, because we do tons of software transactions, so we have a good pulse from the buyers universe. Advising these clients and keeping that relationship on from a much ahead of the transaction. You become more of a trusted advisor, keeping that relationship going. And when they are ready to transact, then you have prepped up the company to a level that it is ready for a sale. So I think those are the key points which I would say that it's relationship and integrity and keeping things more in real perspective.
Makes sense. Thank you. So, we're in a very interesting environment right now, still highish interest rates, right? Like the market is not where it's supposed to be. From an M&A perspective, there's room to grow higher, right? So how has your approach to advising companies evolved, let's say, over the past 5 years? And what
Yeah.
metrics do you evaluate
Yeah.
before taking a mandate in times like today?
No, totally, and I think that's a good question, Sumit. I think the world has changed quite dramatically post pandemic. When you're talking about a 5 year period, we were from 2020, we were in the middle of the pandemic, so people weren't sure where the world was going to begin with. So everything kind of stopped, at least for a while. 2020 was a fairly depressed year. Things started coming back very strongly in 2021. There was a pent up demand, so deal making activity really went up the roof. And I think 2021 and the later part and early part of 2022 saw some significant uptick movement in the especially in the investment banking or the M&A market. We had, I think, once that whole pent up demand died down, we had a little bit of a lull period from 23 and 24, one very strong year. I think the interest rates went off the roof, the inflation was so people started getting a little bit more careful in terms of the cost of capital got expensive, and there was a fairly slowdown in the deal making activity. We have started to witness that deal making activity come back. I think the general elections of the US have proven to be quite a boom for the M&A market, for the financial market. There's also the case of that the last 2 years have been relatively slow. From an interest rates environment, I think if not coming down, they've at least stabilized. There's projections that the interest rates will probably reduce. We are expecting at least two different scenarios in terms of interest rates reduction this year. That should help, obviously, the M&A markets and the deal making activity as the cost of capital gets less. Second thing is, I think the people who've been sitting on the sidelines are now eager to do transactions, and it's not every transaction. It's going to be they're being very choosy in terms of the transaction they want to work on. Recurring revenue has become a fairly major theme. The companies which have that recurring revenue model growing in a market which has a fairly big TAM, those things have become really, really important to the investors, and especially with the private equity world. So good companies will always see a good demand. Mediocre companies, those deals are getting tougher to get done.
Got it. Thank you. Are there any qualitative metrics that you use to define what is a good company or a mediocre company? Are
Yeah.
you talking about Rule of 40? Any other metrics that you look at?
Yeah, from a software perspective, Rule of 40 is the first sniff test for a lot of the investors like yourself in private equity. What has become really important is size does matter. The valuations, typically what I've seen, the multiples do change. The companies are viewed 10 million and below in so-called ARR, 10 million and above, 20 million and above, and then 50 million and above. So the size does matter in the industry from how people view this. Smaller companies are seen more of potential add-ons to some larger platforms. The bigger companies could be a thesis for a platform investment. One thing is that. Second thing, what has really piqued people's interest is the market they play in. I'll give you an example of AI now. Yeah, AI is a fairly big buzzword. So everybody who's dealing with data, who's dealing with so-called these machine learning tools, they have started to morph themselves as AI companies. Not everybody is going to buy into the theory of AI, that data business is an AI business. So what we have seen that people have started to get smarter in this, how this AI technology is going to evolve. And second thing is that how the companies which are better able to use AI as an agent are probably going to outperform people who are actually developing AI tools. Yeah, so that's the so-called shift we are seeing. But AI is definitely here to stay, and we feel that AI is driven by a lot of software and data, which I think the software companies are well positioned to do that.
Thank you. That is super helpful. Let's double click on when we were speaking about the metrics that you evaluate before taking a mandate.
Yeah.
What qualities do you look for in a company's leadership team when advising on transactions, and how can they best position themselves for success during the process?
No, totally. I think, see, in a transaction, most of the time what happens is that if there's an investor, a private equity investor, they're backing a management team. So the management team becomes the critical focus in terms of where the investments are going to go. The qualities we look at from a management perspective is their track record. Yeah, if they've had a successful track record in the prior, that is indicative of how the future is hopefully going to turn out too. Second thing is the vision. We strongly believe an entrepreneur who has a vision and is a little bit more grounded in reality, they do much better job in a transaction than the hope of the moons. Yeah. So thirdly, I think is the execution. How well is the entrepreneurial team able to execute on their plans? Growth is important to see that vision of that execution. As I mentioned before, if it's a M&A transaction which is represented by a banker and a private equity, more likely than not, the companies have already reached a certain scale from a revenue perspective, customer perspective, penetration perspective. It's not, they are not just beta companies at that point. Yeah. So I think all of that's combined together from vision, management strength, prior history, financial performance, markets they play in, the penetration, the growth. I think all of that becomes important in terms of selecting an entrepreneur or a private company for sale.
Got it. Thank you. So, talking about the operators, right? I was in that chair pretty recently. So, when the operators are looking at selling to private equity versus strategic, how do you counsel them, right? Because they have different objectives. Let's
Yeah.
say some of them don't want to be a cog in the wheel and don't want to sell to a strategic. Obviously, valuation aside, right? Like, that's a very important factor, the board decisions. But just from an operator standpoint, if they're continuing with post transaction, how do you counsel them? And what is their viewpoint that you typically look at
Yeah.
and read that into getting the transaction done?
No, totally. So, see, a lot of you're right, lot of the operators have a little bit of ambitions in terms of the private equity investment or partnership because they've heard some horror stories regarding that partnerships. Yeah. Strategics, see, it all depends upon the motivation of the investor. If the investor, no, not the motivation of the seller, sorry, motivation of the seller or the entrepreneur. If the motivation is to sell and walk away from the company, then our advice would be okay, fine, be a part of a strategic transaction where they can integrate this company in a bigger fold, probably give an exit to the entrepreneur or the management team, and then let the bigger company run the show. If the motivation is that they want to see this company progress further, two-step process from a sale process, take some chips on the table, grow this company with the partner to the next level, and sell at a much higher valuation from a step two perspective. Then we strongly advise that a private equity does that job really, really well. They incentivize the management team for the next round of growth, next round of exit. At the same time, they have a capital partner to fund a lot of their other acquisition ideas or a lot of their other business related ideas. So that way we feel. But and thirdly, what I would say that the lines between strategic and private equity valuations have become much narrower. Firstly, I think the notion was the strategics can offer more based on certain synergies being realized in business. Private equity has become very competitive in the marketplace. What we've witnessed, there are more private equity transactions. A part of that, there are a lot of private equity firms which are eager to deploy money than strategic transactions. Most of the transactions we sell, I would say, is 70% private equity, 30% strategic. So we are actually highly excited about the private equity universe. They are good buyers. They grow these companies very well, and then exit at a much bigger valuation they get in. Yeah.
Yeah, thank you, Vineet. Super helpful. Um, I know it's a broad question. How do you anticipate the software investment banking landscape to change over the next 5 to 10 years?
Yeah, so since software is here to stay anywhere, a lot of the investors, especially as told you from a financial standpoint, they like the certainty of recurring revenues. And as software companies or SaaS companies do provide that kind of an element of certainty. So there's a little bit of security, and that's how probably software companies get a higher multiple than the pure services business, which are more project based. Yeah. That being said, I strongly believe it's a little bit of that wait and watch thing between how AI is going to disrupt the software industry. The last podcast I saw of Microsoft, which is Satya Nadella speaking about software companies becoming AI agents. AI is definitely going to disrupt a lot of the software market or the software company market. And I mentioned before, a lot of these software companies, if they're able to utilize AI as an agent capabilities, are probably going to still survive and do very, very well. Second thing is software has also become a crowded market. There are a lot of companies doing similar things, and it's tough to grow businesses. So the people who have reached a certain scale, and our metrics from scale perspective is at least a 10 million ARR. If people have started to reach that 10 million ARR, then it's a proven model for further growth. And that's how investors look at it as well. And we are still very bullish about the software industry. Hopefully, AI is going to benefit the software industry more than other businesses.
So, as we wrap up the final two questions, looking back on your investment banking career, starting as an analyst in the space, congratulations. What are some of the most rewarding deals or experiences that stand out for you?
You know, yes, I've had a long career in investment banking, from big shops to smaller boutiques. I think the most rewarding deals or my career has been working with entrepreneurial driven businesses, which is usually in these smaller boutique firms, mid market firms, rather than doing a $1 billion transaction. I represent founder led entrepreneur. That's what we do today, and that's what I did in my previous job, was to advise on private transactions, selling them to either private equity or strategic buyers, mostly to private equity world. I think it becomes the true nature of that trusted advisor role, because this is probably the biggest event in a life of an entrepreneur if he sells a company. That's this decision is, they don't take it lightly. It is a bigger event than most of the events in their life. So we enjoy that thrill of developing that relationship with the founder, maintaining that relationships. Now I can confidently say some of the transactions that I've done, the entrepreneurs who are leading those transactions are my best friends now today. They've had successful exit. Obviously, it's a transformative wealth for a lot of these people. Suddenly you get 50 million, 100 million, $200 million checks in your bank. It's a generational wealth change for them. So this is important to them, and I think I enjoyed the second half of my investment banking journey, dealing with private individuals, private entrepreneurs, better than dealing with the board or public companies. Yeah.
Makes sense. What advice you would give to someone aspiring to break into investment banking, especially in sectors like software today?
No, totally. So look, gaining from my experience, what I advise all of the people coming out of college to get into investment banking is, like, if you want it bad, you will have it. That I'm a big believer of, if you want something strongly, you will make it happen, and the world will conspire to make it happen. Yeah, that's one thing. The second thing, what people look at in terms of getting into investment banking as a recruit, let's assume from the other side, from a recruiter standpoint, yeah, there's certain aspects of the candidacy which people like. Is firstly is your grades. Means you have to meet a minimum criteria, because a lot of the people who are applying into investment banking have high grades, come from good schools. So I think I would advise a lot of the young kids to keep up to the academic standards to begin with. Second thing is that I would advise them to have certain internship experiences. Try to work in a, if not an investment banking job, at least some form of financial jobs, to give you some sense in terms of if this is something. And second is networking. I mean, don't underestimate the power of networking. Networking goes a long way in every step of your career, whether it be starting with your career to get a job, to obviously at my level, who's leading teams. Networking will, it's a people's business. Investment banking is no different than, it's a people's business. People would do business with the people they like. So likability is another big factor in investment banking, particularly software. have a blend towards technology. If you are planning to get into tech investment banking groups, show that apart from having financial acumen, you should be able to at least put together DCF or discounted cash flow models, understand the basics of finance and economics. At the same time, have a blend towards technology investments. For that, whatever you need to do, read the paper, Wall Street journals, maybe attend few forums in technology, keep that appetite alive. And I think, yeah, and I told you, if you're hungry enough, you are dedicated, you want to work hard, there's nothing stopping you. Yeah.
Yeah, so along with that, so along with the academics, desire to succeed, perseverance, you are a nationally recognized squash player. Do you think athletics, do you think some of these streams can help you get into investment banking, succeed into investment banking?
Look, I think in any form of life, athletics helps you in shaping up your personality. The way I look at my career or my personality development, yes, being a former national champion in squash in the US and India, it gave me a perspective of that, perseverance and hard work and a go-getter attitude. Yeah. I pursued that into my career, and that's very important. And I'll tell you, a lot of the investment banks or any form of so-called competitive job market, they prefer people having a sports background. Not necessarily you have to be at the top of the ladder, but you need to be competitive enough to show, and the competitive shows some of your results. Obviously, will show your competitiveness to begin with. It helps in anything you put your mind into because you've already proven yourself in a certain aspect of your life, which is sports. That does translate into any form of work environment you are in because you're willing to persevere, you're willing to work hard, you are willing to take defeats. That's a big differentiation between a non-sportsman attitude and a sportsman attitude is to willing to take setbacks. There'll be more setbacks in your career, in your life than your upsides. How you manage that, how you come out of it, and how you grow from there, that differentiates you being a sports person. And then the attitude of never giving up, that sports teaches you that. Sports is a very vital form of so-called life learnings. Your teamwork, you work with teams, you work with different personalities, all of that. No book, no textbook, no college can ever teach you that. Those are life lessons which you actually learn from playing any form of competitive sports. And I would highly encourage you. Like if I had to hire somebody, I would rather take a sports person who's demonstrated a level of competency, at the same time has good academic credentials, and has shown the eagerness to work in a field like investment banking. That makes a perfect candidate for a long-term success in a career. Yeah. And yeah, I'll leave it to that. Yeah.
Awesome. Thank you so much, Vineet. That was super helpful. We learned a lot from your career, your insights, and I'm sure audience will enjoy this session a lot. Thanks once again for coming to the podcast, and we look forward to having you back sometime soon.
No, totally. And congrats, Sumit. We look forward, obviously, from Kroll perspective to doing deals with Gulmohar. So you guys have developed a great team. Hopefully, we will consummate some transactions in the software space. You guys are good investors. You've been in that shoe before of growing companies and having good successful exit. And we look forward to working with you guys. Yeah.
Looking forward to it, Vineet. Thank you so much once again. All
Thank
right.
you. Take care. Bye.